Solutions, and let's try this one more time. So hopefully the audio works on this one. The thing that I quickly wanted to talk about is last week, not enough news outlets are covering this, but the Federal Reserve added $300 billion to their balance sheet. And surprisingly, again, this is following what has happened with Silicon Valley Bank. And although they say that the $300 billion is non-taxpayer money, I mean, we always know who ends up paying for these things, and it's people like you and I, right? Very unfortunate scenario, but what exactly does this mean? The reason that I'm bringing this up is that in just 3 days, the Federal Reserve is going to be having their FOMC meeting and announcing their next interest rate hike. Before the bank failure of Silicon Valley and everything that followed after, it was to be expected that the Federal Reserve was going to stay the course and fight inflation, right? Inflation was at a 40-year high. They've been fighting it. Right now, we sit at a 6% inflation rate. Great. Let's continue to raise interest rates to make sure that inflation doesn't go back up. But that's not the case anymore. Because of what's going on with the banks and the fear and the ripple effect of potentially more banks like JP Morgan or Bank of America beginning to fail, they are taking into consideration of only raising interest rates a quarter of a basis points or nothing at all. Believe it or not, I mean, they are thinking of completely pausing these interest rate hikes because of the fear that larger banks could potentially fail. But let me explain to you why that's so significant. Well, not only are we right back nearly at all-time highs when it comes down to the Federal Reserve's balance sheet, and pretty much what this means is how much they continue to print, right? The unfortunate part about this is that the Federal Reserve originally had a goal of reducing their balance sheet. You might have heard the term, and it's called quantitative tightening, right? In 2020 and 2021, there was the focus of quantitative easing. This is when they were printing out all of those stimmy checks that everyone and their mother got, right? Now, because of inflation being so high, they're trying to cut back on that, right? So they're trying to reduce their balance sheet by being able to sell off their mortgage-backed securities and their bonds. But because of what's going on, they had to add $300 billion. That's not good, right? Because now they're pretty much just adding more debt to their balance sheet. On top of that, the Federal Reserve, again, needs to decide if it's going to be raising interest rates. And that's probably the single most important thing that is left for the month of March. So if you guys haven't done so already, on Wednesday, March 22nd at 2 p.m. Eastern Time, the Federal Reserve is going to be announcing their interest rate hike, and the stock market will react. If they announce a more aggressive than expected interest rate hike, the stock market will drop, and pretty significantly, right? So like, let's say that they raise interest rates half a basis point, so 0.5%. We can most likely expect that the entire market is going to drop. But if they, do what they are now currently expecting to do and only raising interest rates a quarter of a basis points and or nothing at all, then we will most likely see the market react in a positive way and or stay standstill, because that's currently what is being factored in to the current market. So when asking the question, why did the market go up last week? That is the exact reason, because after the bank bailout, right, it seemed odd that the market began to go up, but it's because there's so much fear of raising interest rates that they're most likely going to have to pause and not continue their course in raising interest rates. This is very unfortunate, and it puts us in a very tough position because, again, think about the domino effect. Because we are pausing raising interest rates, that means that inflation runs the risk of going back up. And if it begins to go back up, then again, this just means that we're prolonging this market pullback. We might rise this week because of the lower interest rate hike, but then if inflation begins to go up later down the road because we're not raising interest rates and trying to moderate it, then that just means that later down the road, the market's going to end up being pulled back, because then the Federal Reserve will have to play catch up, right? And continue to raise interest rates, maybe even more aggressive of, 3/4 of a basis point interest rate hike. And on the technical side, one of the things that I wanted to bring up is just, that resistance that we have, and it's a little bit easier to see on the 4-hour time frame. We are approaching our resistance range right around 310, and what a perfect time to do so, especially as we are approaching, this up and coming interest rate hike. I just wanted you all to be aware of it. We had a previous support range at 290. We talked about it last week. Current resistance range right around 310. So depending on this interest rate hike, it will determine if we get rejected and go back down to 290, and or if we break above 310 and work our way towards making new highs. Remember, when asking the question, do you have to force a trade and or try to predict the future? Definitely not, right? Because we do not know if the market's going to break above and or get rejected. So why not stay cash, wait for confirmation, and then choose to either go long if we break above or go short if we begin to pull back. There's always money to be made as long as we focus on one thing, and that is market direction. And that's why waiting for confirmation is so important. So I am going to be live streaming the FOMC interest rate hike at 2 p.m. Eastern time. So if you guys want to tune on into that live stream, all I literally ask you to do is to drop a thumbs up on this video, get it to over 1,500 likes, and make sure that you subscribe to the YouTube channel so you guys get kept up to date with when it is that I actually end up going live. Other than that, I will see you guys tomorrow at Market Open for our live trading session. I do trade live every morning with one team and one team only, and that is our LPP team, and that is that second link in the description down below. Right now, you will get automatically entered for our GTR giveaway by clicking and signing up for that second link in the description, and that's all new Learn Plan Profit members earn an automatic 5,000 entries towards the GTR giveaway. If you want to learn more about that, click that second link down below. And also another way to enter is shoptechbuds.com, and that's that fourth link in the description down below. The more you shop, the more that you get entered. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.